Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Monday, May 15th, 2023. If you're not a believer in hybrid swing trading on 30-minute charts, maybe today will persuade you. We're looking at swing portfolio, starting with Alcoa. This is all on 30-minute charts. You will recall that last week we just noticed the nice tight compression. The PSAR flip didn't happen until today. It flipped today, so we just take it like we always do. Here's the standard risk box. Here's the move, and it closed here. So we're holding 1, 2, 3R. In the usual way. It's testing the 5-day high. And if that breaks, look out above. AI sent out a note to the folks in gold and platinum. And we had this amazing gap up in AI. That's the little software company that we track. Clean that up a little bit. So there was something like a 10% gap up. That constitutes a large gap. At the close, it kept going up, so we, at close of the first bar, I should say. So we just held our nose and bought it with a standard risk, added at about 3R and at 6R, and took off the entire swing position here. 5, 6, 7, so 7R on the first one. 4R on the second one, 2R on the third one, so 13R, no overnight risk. Why wouldn't I keep any of that overnight? I felt like that was a perfect trade and a perfect gift, and I just wanted to celebrate that moment. So that's why. Here is our Caterpillar trade this morning. This is about 1R. It collapsed pretty hard, taking the exit at the edge of the dragon. That's about an R. Cliff, PSAR flip, breaking out of the dragon. This feels like a kata 2, and are holding 1R into the close. CVS, about 1R into the close. Dish Network, 1R into the close. Devon Energy. Now, you will recall, those of you that were listening in this weekend, I went through almost an hour-long discussion of how to frame trades through the lens of reward and risk as two separate functions with two different parts of your mind in order to overcome the inner doubts and second guessing that was plaguing some of our folks. So the first thing we did was identified the low risk entry near the close on Friday. And on the 30-minute chart, that is the rational risk box. So I'm just going to frame that from reward using my rational mind. And I'm going to say, conservatively, that thing could get back to the previous peak of the RL10. So a conservative estimate would be here. And if that's my risk, that's a 2R reward to the conservative first point of resistance. If I use a normal rational approach, I come to the next point of resistance, which is an additional 1, 2, 3, 4. So that's a 6R, 6 to 1 to a rational second level of resistance. If I go back to the peak of the 30 days, then I get an additional 1, 2, 3, 4, 5, 6, 7. So that's 13R, 13 to 1, compared to the 1R risk. So by any measure of rational evaluation of opportunities using conservative, sort of normal, and optimistic risk, this trade qualifies on the risk basis. So it should be easy for me to take it, except that your reward mind is only concerned about the rewards. There's a separate part of your mind that is concerned with risk. And so we went through a process of evaluating various levels of potential exiting, which we drew as big fat red lines at various levels of exiting. We saw that on a 3-minute chart, actually, this was a tradable move just on Friday and would have returned 2R. And that's using the R10. And it turns out that this 30-minute risk box is 3 times the R10, or darn near a frog box. And so that was a more conservative risk level according to the 30-minute. And then as we went through daily, 3-day, and 9-day charts, we saw that there were various different levels that could be used. So what we agreed to do with our risk and reward mind was says, hey, reward mind, check, it meets all the criteria. Now risk mind, I promise you that I'm going to exit on the 30-minute chart if it exits right there. I promise you I'm going to take that. And that's what we call the execution risk. That is the signal that's going to get me out of this trade. But for position sizing risk, what we did was did an inner theater interview with that trader's particular risk manager, who was very risk averse. That is a personal and emotional decision, because that risk manager is concerned about not frivolously throwing the dollars of his children's estate against speculative trades. That is a healthy, natural, normal, professional response. But what I need to know is which level of risk manager do you feel is justified given the look-back periods that are of concern. And then we're going to use one of those risk lines for position sizing. Now, I don't even have to qualify the trade as 2 to 1 on that, because I've already established this thing as a reasonable 13 to 1. And it turned out that the risk manager, in his mind, wanted this big, thick, fat one. Why? Because on the 3-day chart, it was well out of the bottom of the R10, and it was at the 150-day low, and he saw that and said, you know what, I can take that trade towards what you were aiming for, and I'm willing to take that as a 1R risk. So an entry at 47.25 and an exit at 44.07, which is $3.20 of risk. So we're going to use that as the 1R loss for position sizing risk, or the P risk. And now when you come in and take a look at that on the 30-minute, I've already promised that little internal risk manager that if this risk gets hit, if that exit right there gets hit, then I'm going to take the exit, and then that actually represents, when you look at the full risk box, sorry. So if I take that 1R execution risk, or the execution exit, that's really, let's see, 3, 4, 5. That's probably 1/8 of this whole thing. So that risk, if it's a loss, if that thing were to have failed through here, that's about a minus 0.13 because of math. And that actually represents what his internal emotional state was ready to risk for the total portfolio, which in his mind was his children's estate and the family for the next 200 years. And so he doesn't want to be frivolous taking on those risks. But we also want to be realistic with that risk manager to say, what is the level of risk that you would be satisfied taking as a 1R loss? Because we're only going to take that much of a loss. But what would be a 1R loss for you? And we're not going to violate that. So we ended up picking this one. So then with $3.20 per share of risk, and he trades $500 of risk per trade, that allows about 160 shares to be traded. Done. Now, as it turns out, today's little trade, it opened here, sold off, peaked as high as here, and if you wanted to, you could take a 2R execution win right there and go from 47 and a quarter to 48 and a quarter, which is $1 per share, which would be about $300 of profit for the one-day trade, which is fine. So I want you to start thinking of framing the reward with whichever mind you use to conduct the analysis of the opportunity. And that is typically a rational, analytical mind. It might be optimistic. You don't want to be optimistic. You want to be rational and measured. And I recommend taking a conservative, normal, and aggressive or optimistic mind. And if you can get 2-to-1 execution risk to your conservative mind, you're good. And then you can decide with your emotional center, your risk manager. Remember, that's coming from a completely different point of view. If you look at the 5 ways of knowing that we talk about, we say the first one is the head. That's your rational brain. Your heart is your identity and values. And remember, that was he was thinking with his heart about the estate for his family. That's a value-centric point of view. And with that in mind, his risk center is in his gut. And that's where the risk is not concerned about where the rewards or opportunities are. The risk mind, the emotional mind, is the one that says, hey, within this span of my awareness, there could be tigers out there that are coming to eat me. Yeah, I know you're out there looking for opportunities for reward, but the risk manager is concerned about tigers and sharks inside the danger area. So we've got to satisfy this risk manager with deciding where we're going to place the 1R position sizing stop. Respect that. If he is satisfied with this one, go ahead and take the next one and have even smaller position until you feel calibrated. If you do that 100 times, you're good to go. You could even study the gap stat and say, what's the largest gap in the last 200 days that I've seen? Maybe that's the level of risk that I'm concerned about. Not even the average gap, but what's the worst one that I've seen in 200 days? Or 1,000 days. You decide with your risk manager what the level of risk is that you want to take. Let your rational mind frame the trade on the time frame according to rules, but trust your gut, because if you don't, you're going to spend the rest of your life fighting internal dialogue because you're not aligned between risk and reward with your 3 ways of knowing. Now, you need the knowledge of your hands to help you frame the trade correctly, and you need the knowledge of your feet to do that 1,000 times with endurance correctly each and every time. So you actually need all 5 ways of knowing in order to properly frame reward and risk. Now, if you want to listen to an hour's worth of live on that, that's what we did in the creativity course last night. Back to our regularly scheduled program. Let me know in the comments if you found that helpful. Let me know in the comments if you didn't find that helpful so I can spend the rest of my night wondering why. All right, so emerging arts. Electronic arts, we tried this one as a continuation trade to the downside because this thing had rolled over once, twice, 3 times. It sold off this far and it came back, and I was able to get out of it with a scratch. There were so many other opportunities on the long side that I elected not to take the PSAR flip because I think there's more pain and suffering coming, and you can already see it starting to develop. So tomorrow, that would be one of our high priority shorts. Emerging markets, one of the trades of the day. Here was the close. Some of you asked me, why did I take that exit on Friday? So that I could bank 2R and sleep soundly, and then, not take a 2R loss on the 4R adverse gap. And we were able, therefore, with a clear mind, to be able to enter, add a second position, add a third position, and then just take the whole thing. 1, 2, 3, 4 on the first one, 1, 2 on the second one, 1 on the third one. So 7R, no overnight risk. Why take that as an exit? Because it already just barely cleared this, and here's strong resistance. How much more did you want to have? Do you want to have 3 units of risk overnight on that? No, I'll take 7R and sleep calmly. I know how to re-enter tomorrow. ETHE, finding support where it found support before, started its move up, took 1 unit of risk at the entry, holding about 3R overnight. It's going to test this tomorrow. If it breaks through, I'll add a second position. Otherwise, I'm looking to get out in that region. Mexico, love you to death. This was from Friday, the 1, 2, 3 entry with a standard risk. It closed well, so we held it. Today it moved up. It cleared the hump of the dragon, so added a second position. With 2 more R, added a third position, holding this one at the close with 3 positions overnight. 3, 4, 5, 6. The first one is 6. The second one is 3. The third one is 1. So we're holding 10R on 3 positions for overnight risk. Why hold that one overnight? Because it's over the RL10 and it made a new 30-day high. What's not to love? That thing is free and clear. You got to be able to hold that one overnight. and we got markets money that paid for the three positions. Take that all day. It already blew through that last support level from the last surge. It held support here, it held support there and surged, it pulled back, held support, and off we go. Go Mexico. El Tree. Second position in Brazil, holding 1, 2, 3, 4, 5, 6, 7, 8R. Intel, two positions, holding 4R. IP, no trade. Real estate, no trade. Missed this one on regional banks. I was expecting the short side. McDonald's, we tried this one on Friday. That sort of noisy Kata 2. It surged for a while. I held it as long as I humanly could. Collected the no lose plus dinner for 2. It then reversed and closed well, so I'm holding another one overnight. It's basically flat right now, but we're holding one unit, and I'm looking to see it get up into here. Today was a strong day in the market, and I got some belief in McDonald's. Merck, we initiated near the close. Marijuana, no trade. Clean energy, we took the 3R gift and exited at the edge of the dragon. Rivian initiated on the SSC. Treasuries, no trade. This is one where the fear of the overnight adverse gap made me miss this one, and I'm more than happy to miss that one forever. As long as I can get intraday trades like that in treasuries, I'm not going to try to predict the gaps. But this one sure looks interesting, holding right here, the same place it held here, and then gave us that. Could that happen tomorrow? It sure could. So we'll be ready for that tomorrow. Tesla, no trade. U.S. Steel initiated on the Kata 2 at the when the spring turned to summer. So pretty good day in the hybrid swing. So we've got about 4 months of doing this every night. That's about 100 nights of continuous portfolio management. So I may just turn that into a workshop and then save 20 minutes a night of doing this. All right, let's go to so sniper trade of the day. Yeah, this was the frame that we used over the weekend to talk about how to do that Devon energy frame, and then this was the follow through today, where a couple R was available. And that's just our little badger looking at us. Like that guy. Find your edge. All right, so this is a big gap up. That was a 10% gap in AI, and we're on the 3-minute. It sold off and started to resume. There's the OR3, so we just hold our nose and buy it. This is the 2R battle drill line. Second position, third position. Exit near the close. I kept one swing position open and sold off 2 of the intraday. So that's basically selling 90% of the position and keeping a swing position on. And just on the swing, or for the intraday, this works out to on the first position 1, 2, 3, 4, 5, 6. So 6. This one gets 4. That one gets 2. That's 12R. So I sell all of that in order to fund one swing position with a wider stop. And now I have some markets money available from this symbol to pile back on if it continues to go. Hybrid swing trading. See where the boys are. Kenneth, where is the entry? Stand by. There was a question on where to put the stops for the swings. Every person's going to satisfy their own internal risk manager, as I just described. You can look at where I'm putting my stops with your rational mind all day, but you're never going to be satisfied until you have interviewed your own internal risk manager and have decided what stop is that person, that part of you, ready to accept as a 1R position sizing loss. That's such a personal, individual risk tolerance, portfolio heat, percentage of total portfolio exposed in that style, familiarity with their, all of those things go into an integrated view of how much risk that you can sleep with. That's why it's interesting but not relevant where I put my stop. In my view. I mean, it's relevant, I suppose, but it's not really. Not to your risk manager. Your risk manager is worried about the risk to your portfolio, not what my risk tolerance is. All right, so Tim brings home 1.7 in Newmont, does a nice OR3, gets long, perfect exit, gets the short, and makes bank. Yeah, the hour-long video on that from last night, from the creativity course, was really worthwhile. If that doesn't persuade you that the creativity course is worthwhile, then I need to just stop posting those videos because it was pretty compelling, in my view. Alcoa, Tim brings home 2.5. Nice work. OR3, long, cover, tries the short, takes the 1R. I think that was waiting too long. And the reason why is this thing on the PSAR flip is supposed to fail right away. And it doesn't. It gives you, it crosses the VWAP right there. I could take it right there instead of waiting for this. And then I'd be willing to take that as the long. Look what it just did. The entire market was moving up hard. That's where the stop and reverse, in my view, ought to be. But that's a reasonable position, and I'm not going to argue with 2.5 on that one and 4 for the day. I'm not arguing with that one at all. Damien. All right, here's the OR3. That's where we should be short. And then on this one, I'd probably cash it as it crosses the dragon. I like this one. I like it in long there. If you're long, and I can't see on this where your trade, the specific trades were. I think you got short here, and took a short loss there, and then waited for this one, and then cashed here, and then got long here, and then exited there. I think that's what I'm saying. So I need you to draw the boxes. But I'd like you to just notice um, how clean and clear, even on the 1 minutes, the S&P can be. And notice the very clear turning points at the peak and the valley of the RL10s. And now, I mean, this is uh, spring, winter, spring, summer, fall, summer. Boy, that's just as nice as you can want right there. And Kata 2 right there. And Kata 2 right there. Oof, nice. Even on this one, when the harsh winter, because it's outside of the Red River, reverses quickly and gets right into the summer, that's telling you that there's an entry on the long side right in here, which there is. This one is telling you that there's an entry right in here.
I know. That's why I gave you all the explanations, because I did not have a good frame of mind this morning, and I did everything backwards. But I ended the day with a 1.3R. I got lucky on that one.
Yeah, you got paid to learn.
Yeah, I know.
I don't mind getting paid to learn.
So I was happy. It was a good outcome.
Yep. This is Brian. And let's see what we're looking at here. This is DIA also on the ones. He's doing the ones because he wants to get some stick time and get used to their more rapid decision making. This is the open. Here's a PSAR flip. So this could be short to here. He does trade this one long and takes the minus 0.8. When those things cross the dragon and the PSAR, just take it here. You could even be short there. Should be short there. And then if you scratch, this is the stop and reverse. Kata 2 crushing it. That's worth taking. That's a great exit. So 0.8 today. He's up 20 for his first 65 trades, which is about a 0.33 expectancy. Let's see here. All right, so this one, I'm presuming that's the range stat. So we've got, here's the open. So now, if that's the open, that should not be the entry. You should be having your OR3 on that. Oh no, yeah, OR3 there, and then taking the short here, and that should get you paid. If you're getting long because of the gap, then taking a 1.3 R loss is just not correct. Don't do that. That could be your stop and reverse, which would get paid. This is where you got short on the collapsing dragon, which I don't mind. But as soon as that thing does not fail and crosses the VWAP, we could be long in here. And then that could be your second position. So there's some work to do on that one. This is rad. This is now this is the yen, and this is on 3 minutes. And I find 3 minutes fast on currencies, but this is a beautiful PSAR flip and cover. And here's a collapsing dragon reentry and Kata 2 reentry. And then your natural exit would be here. That would have smashed. And then here is that's a PSAR flip, and so is that one. That wouldn't get paid. This one gets paid. They all look the same leaving the exit, leaving the station. When that rolls over, you get an owl entry right about there, and that one is tradable. I like this Kata 2. You stuck around way too long and took a full R loss. And that I'm sensing that you are believing in these trades, because that was like 15 bars and it did not fail, and it's supposed to fail. So that feels like we took too much of a loss on that one. Perfectly measured and captured. He gets the excursion from the Z3 pinch. Doesn't take this one, but gets the sideways quiet channel Z3 pinch. Here's the breakdown. It breaks through the VWAP, and then he gets a nice paycheck. PSAR flip. He lets that thing unfold in his direction. Nice work. This is Brazil and Hamad. Here's an OR3 short. Won't lose money. The PSAR flip was late. Feels like. Yeah, so that lost 0.84. Remember, these are supposed to work right away. If that thing is going to work, it's supposed to go. So when it rolls over and comes back in through here, maybe we can cut that sooner than here. Waits for it to reverse, gets paid, quick loss, and then gets paid. So, and then here's the beautiful Kata 2. Wow. And then that's a great exit. A place to consider second positions, if that's one. So you could go 1, 2. This will have cleared the R10. So somewhere in here there was an opportunity for a second R, or second position. But after that burst occurs, you just want to manage that exit like you did. That looks good. Lots of stuff going on this one here. Let's see. OR3 breakout gets a good fractional loss, takes the OR3 breakdown. On this one, I would advise, when you see the R10 cross over the baby dragon, that's sort of telling you the run is done, and then you can take it at the edge of the dragon or the spine of the dragon rather than the full PSAR. Then you can take the PSAR flip as your risk, because you're out of this trade either here or here or here, and then you can take that trade, which is massively good. I like the second R position. I like that, both of those shots, and staying with it. So the only thing I might say is no. I like all of that. That's not bad. I think there was some room for improvement here. I don't mind you not taking that short, because this thing was such a strong upward move that waiting for this to recover, by that token, if you're going to be that committed to the long side, you got a 1, 2, 3 entry somewhere in here as you start adding that skill to your repertoire. But all things considered, that's a good one. And I think maybe when it comes through the dragon, we could exit here instead of taking that loss. This is the S&P on 3-minute. This is where your stop and reverse should be, because now what you have is a COTA 2. So when this fails to fail, that gets you out, that should be getting you long. And that would give you almost an extra +1R. I like the second entry because it had cleared the previous hump. Pretty good exit. I like this one. And again, your stop and reverse could be here. And when it gets past the Z3 and then starts failing sharply, that's like the dragon horns right there. And then you had 1, 2, and then starting to fail right there. Or right here. No reason to wait that long. You've already given back a full R. So we only we kept less than half. And those will add up over time. The Qs. I like the breakout entry and going. Good cut. I'd like to see you short there instead of here. And then on this one again, look how long it took to roll over. It did not fail further. And it crossed the baby dragon, so get out in here rather than here, and then go long here, and then caught a 2-second entry there, and then your exit is excellent. This is a great COTA 2. I like that one. That's a good cut. I like the second shot, and that's pretty good for the day. A little bit of extra attention to detail, that's a positive day for you across the board. Dashboard 1, bull quiet, strong posture. The risk off is a little concerning. It's saying be careful. And the winners are Coke, Procter, McDonald's, and old school tech like Cisco. That's pretty good. Just something to notice, those of you keeping score at home. In the last 30 days on the gap stat, when the market gaps up, 10 times it reversed to close lower, and only 5 times did it close higher than the open. So 2/3 of the time, if it gap up, 2/3 of the time it has failed to and closed lower than the open. Whereas over the last 200 days, that's been a wash. And then if you notice, the gap down reversals are 3-2. So fading the gaps in the last 30 days has been the dominant theme. Dow Tactical, tons of auto framers, 3-5 DDs. Big weakness in Pfizer continues. Notice the big winners today in Techland: Intel, NVIDIA, and Texas Instruments. All of the chips. So continuation trade tomorrow on those guys. ETF 30. Big wins in the globals. That's Japan, Mexico, and Brazil. Mexico and emerging markets, big opportunities tomorrow. U.S. tech, conservative tech, was pushing the upper boundaries, and it was stronger than the NASDAQ tech. But the globals were really en fuego today. Standard work on the auto framers and the squeezes. Some sniper trades. The only one that was moving large today was CCI in the S&P, and the two in the tactical set were pretty quiet for their one-day moves. Standard work here. Notice that all the chips were very strong today. Intel, NVIDIA, Texas Instruments, much stronger than the S&P and much stronger than the Qs and much stronger than the S&P tech. So that was money today, and tomorrow, if that trend continues, that should be on your short list of continuation trades for tomorrow. The metals were also pretty good today, all of them. Starting with Alcoa up 4.5%, Cliff 1.75%, and U.S. Steel. All three of the metals also better than the S&P and better than the materials sector. So metals and the semis tomorrow. Short list. Standard work. Tesla back in the number one position for trading value. Marijuana, NVIDIA, that should be very, very short list tomorrow. And Intel and Texas Instruments. They're working. All right, guys, that's everything for today. We'll get this published. I sent 110 pages of the book to my brother to give to the editors, so I'm really pleased with where that project is. It's coming to a bookstore near you. Take good care, and we will see you tomorrow.